generally, how do we define savings? We say income minus expenses is savings. I just turn it around and I say income minus savings is your expense. There's another term for that. We call it pay yourself first.
So we actually talked about a small example of if you just save a few thousand rupees every year, that actually multiplies to a corpus of 7 crores.
Exactly. Invest in stock market only what you can lose, afford to lose.
Right.
So we saw what happened in the last probably 5, 6, 7 years, right? And including the influencers who are preaching crypto or who sold crypto to their investors, lost so much of money.
Yeah. Hi everyone, thank you so much for joining us here today. Welcome to Cashvisory's podcast. I'm Utkarsh, the co-founder, and our aim is to get every young professional to their first investment in the most efficient way possible. I have a very special guest here with me today. We have here Mr. Manoj, who's actually someone who has had a long, illustrious career in tech, 20 over years. He started his career working in SAP as the project manager, and now he's actually the head of support at SAP Commerce. Now, Manoj is someone who's very interesting, and I keep using the word interesting, and I don't use it lightly. There's one thing that I relate to you on, Manoj, very well is you're an engineer who found your way to personal finance, right? You're even a certified financial planner, which is pretty amazing to me. So tell me more about it. How did you manage to do engineering and get to CFP early in your career?
Thanks, Utkarsh, for having me here. So engineering was not by choice. It was a default. It just happened. So when I graduated from my management institute, there were not enough jobs in finance. So I'm a finance graduate. I did my MBA in finance, and there were not enough finance jobs, right? So whatever you got through campus, you continued with that.
Right.
So that's how I got into tech. Not that it was my passion or I wanted to get there, but once you are there, then you just continue, right? And you make the best use of it.
Right.
So somehow I continued that journey, and at around 12 years post that journey, when I saw that most people like me who have been there for decades, but still struggling with money, right? And earning well enough, not knowing how to do, what to do with the money, how to get out of the debt trap, that made me thinking that yes, there is a space where I need to do something.
Right.
And I already had the background from my MBA days. So I thought, let me do something about it. And that's what triggered me to get back to my roots, which were in finance, convert into tech and back to finance.
Right, fantastic. That sounds pretty amazing, and I can relate to it so much. And for me, the journey was even more challenging because I was in engineering, right? And so starting my career working in tech, I later found my way to personal finance. So very interesting way how I got started is I used to actually just watch Bloomberg in the background. And that started piquing my interest. I started learning more about it. So tell me, how did you sort of get back to finance? Because I know you did CFP. Was this few years down the line into your career? Because a lot of things that you would have learned in college as well, you would have probably even forgotten. So how did you get back on the horse?
Yeah, so first thing I realized in 2010-11 was that I myself, after working for a decade, I had no investments. I had no money to do something big. And then it struck me that if something goes wrong, what do you do?
Right.
That was the first trigger which made me think that we need to do something about this. And then when I looked around, I saw everybody in the same situation.
Right.
So I started brushing myself, right? Started learning, self-learning through YouTube videos, some books, newspapers, like you said, Bloomberg, Economic Times, and others. And then slowly I thought, to get some credibility so that I can preach and teach others as well, let me get some certification.
Right.
So that was a hard time because you have your full-time job, which is demanding, and then you have to find time to pursue this passion, learn something, get certified, and then probably teach others, right? So that's what pushed me to get certified, which was difficult 1 year. And I used to do it over the weekend, so travel probably 20 kilometers in one of the centers to get a offline training.
And in Bangalore,
training,
that is saying
Bangalore,
something.
over the weekend, so both the days are occupied.
Right.
And I did certification, but one of the modules I failed thrice. So I had to repeat that module 3 times.
Wow.
But since I was determined to do this, so I was certified in less than a year. And since then, I have been doing these sessions for personal finance sessions or workshops for multiple organizations, multiple communities. And it has been a fantastic journey.
That's so amazing because, it's really the need of the hour. As you said, it's a problem that not just few people face, but it's everyone's problem.
Yeah.
But just tell me, because in terms of the time commitment, in terms of everything that you have to put in, there must have been very strong motivation to get you started embarking on this entire journey. So what was that? What was there something particular happened, or was it just a realization one fine day that you need to do this?
It's both, right? As I said, so in 2010, I suddenly realized that after working for a decade, I have nothing.
Right.
I have nothing. So something is wrong, fundamentally wrong. And it's not that you're not earning enough. You're earning well.
Right.
But still you don't have a corpus, you don't have wealth, you don't have a plan how you want to achieve something. That was one. And secondly, I saw people who were far more better off were still struggling with money. They were in debt. They had put their money in wrong places. Right. So you can claim that that house is mine, but you're paying for that for 20 years.
Right.
Without even occupying that house. Right. So those kind of situations around, and the realization that you can't be in this state forever. At some point, you need to think about your financial independence, and you want to pursue something that you are more interested in. Was the one which pushed me to get myself re-educated and start this journey of financial awareness and education.
Amazing. And again, something that I can relate to quite a bit, because for the first 3 years of my career, I was just in engineering, and I just let my money sit in the bank because there was just so much to do to get started. So I thought, why not get started small? So I just started with small investments here and there. And then I started self-learning. And then started working part-time as a financial advisor, which later got converted to full-time. So I can really relate to the sort of journey that you had. It's really taking a look at your finances, right? Which helps you to realize that, okay, something seems to be wrong here, and more needs to happen. So pretty amazing. And the session that you're doing, would love to know more about it. Is it sessions that you're doing with SAP? Have you been doing it with other companies as well? How has it been so far?
So I'm open, and mostly it has been through references, word of mouth, through friends and relatives. So I started with SAP, and SAP is an ocean, so you can do multiple sessions, and still it's never enough. So I started doing that, and then I started getting with calls from my friends. So I've done it for multiple corporates in Mumbai, Delhi, Bangalore, IT, non-IT.
Right.
Then I do for communities, so some societies will call me for a session, those through references. So I'm open. And initially I used to do generic sessions, but now I do customized sessions. So you call me for an audience of millennials, for example, people who are just passing out of college, or young bachelors, or women-only sessions, or sessions only for people who are about to retire, right, 50 plus.
Correct.
So then you customize the session to the audience and do it. And trust me, I think there's a lot of interest and a lot of need for these sessions in this country.
Absolutely.
Right? The
Absolutely.
ignorance and the illiteracy in finance is humongous.
Yep. And again, something that I can totally relate to you quite a bit, especially on the niche sessions that you talked about. So we've been doing a lot of these sessions for women. We've been doing a lot of sessions for young career professionals, sort of giving them that template so that they can start getting to that first investment. But it's always difficult to get people interested into finance. Because for a lot of people, finance seems like a very heavy topic and a difficult topic, right? So what we do at our end to solve that problem is by adding a lot of pop culture references, bringing a lot of relatability, playing a lot of games with our audiences to engage them. So what has worked for you? Like, how do you sort of get people interested in your sessions and in the content that you're delivering?
That's a very good question. And I think the best part is it's not very difficult, right? So what I do in my session is show them the power of money. Right. So I start with a question saying, what do you want from this session? And most people will say, I want to end up with crores. Some will say 2 crores. Some will say 5 crores. And my answer is, then you can leave the session.
Right.
That you will achieve without doing anything.
Right.
And most of them are stunned. Right. And then I show them a couple of examples where by investing 5,000 rupees, just 5,000 rupees throughout your career, you will end up with maybe a couple of 10 crores.
Right.
And then that's the eye-opener for most of them. Their eyes will pop out, right? Okay, can we make this much of money by just saving 5K, 7K, 10K?
Yep.
We are not even asking you for hundreds of thousands, right?
Absolutely.
So that is kind of an icebreaker with most people. That, I can achieve that amount.
Right.
Right? And when we tell them that extrapolate this, so multiply this 5K to make it 10K, make it 20K, make it 50K, and the amount keeps growing exponentially. So that power of compounding, if we can get it through, I think that's the icebreaker.
Right. Absolutely.
That's the biggest selling point I've seen. Most people get sold on that. And thereafter, I think there's no looking back.
Yep, and again another thing that I can totally relate to, because compound interest is something that's taught to us in school.
Middle school.
But what is the power of it with your
Nobody
finances and
knows.
your money?
Yes.
No one
No
knows,
one
right?
knows.
So in fact, just a small little anecdote from one of our recent sessions. So we've been doing these tax planning sessions, right? Because that was the flavor of the season, and people are really concerned about saving more taxes. So we actually talked about a small example of, if you just save a few thousand rupees every year,
Exactly.
that actually multiplies to a corpus of 7 crores
Exactly.
just by doing the bare minimum,
Exactly.
right? So this is absolutely an amazing example, and I think, guys, it's called a time value of money calculator. Just put in this small little 10,000 rupee SIP in there and see what that grows to by your retirement age. You'll be stunned, I promise you. So go and try it out for yourself. Pause this video, come back, and then continue the session. But that was definitely an amazing insight, Manoj, that more and more people need to know about. Okay, Manoj. So you talked about the sessions that you've been doing, and you've been sort of actively going and teaching people, which I think is very noble, by the way. But was teaching something that always interested you? And is there any sort of special moment that you remember from these sessions that you would like to share?
Teaching per se, yes, it does interest me, and in the long run, probably post retirement, I plan to take up teaching as a part-time job.
Oh, interesting.
In addition, I also used to teach at BITS Pilani, so off-campus program for MTech students. So I get a lot of good exposure and experience there. In addition to that, I'm also involved in a lot of mentoring and coaching. So I'm associated with some NGOs where I coach underprivileged kids.
Oh, amazing.
Yeah, and these are the kids who are into medical education or in engineering graduation, and I help them geared up for life skills, right? So time management and money management and all that
Right.
stuff, right? So teaching is kind of passion for me, and that also pushed me to take up this as an alternate hobby or interest where I can add value to people.
Right. That's very, very interesting. And I mean, I don't know how you get the time to do all of this, from your teaching to your tech to managing your own money. Let's bring tech into the chat, because it's been a 20-year-long career that you've had. And for me personally, it's an amazing time to be alive if you are interested in tech and finance, because there's so much
Yes.
happening in the
Oh,
fintech
yes.
space.
Yes.
But according to you, what do you think? Where do you see the synergies continuing to be developed after all the development that has happened? in the last few
I think today there is nothing without tech. Basically, tech is pervasive, and there cannot be an industry where tech is not there. So tech is an enabler and a catalyst for whatever we do,
Right.
and so is for Fin. So if you see the impact of tech on Fin, today you can do anything and everything sitting right here on your phone with your fingers.
Absolutely.
I remember the times when I used to go to bank and stand in the queue for hours to withdraw the cash. Now you don't know when you went to the bank last. You don't know when you went to the ATM last. You don't know if you have cash in your pocket today. So this is where we have come to. If you look at UPI, what has it done to our country or the society as a whole?
Absolutely.
Look at the number of people who have bought into the banking system just because of tech, right? So
Yeah.
that's the power of tech. And I think we are just getting started. If you take India as a country, there's a very small percentage of people who are still investing, right?
Yeah.
So tech is the only one which can take us so far and can make sure that everybody in the country is enabled to make financial investments, planning, or whatever it takes them to be independent.
Right, absolutely, absolutely. And you talked about cash, not having cash in the wallet. And I think in a city like Bangalore, if you had cash in the wallet, it'll probably be useless, right?
Yes.
Because most people don't want to accept cash, which is amazing to see, right? The development that has happened in fintech in India over the last few years has been absolutely phenomenal. And I think India is far ahead of most markets, if you see, in terms of where we
is.
are.
It is.
Which is something that all of us should be incredibly proud of. So like with so much happening in the fintech industry and space, that access to financial services, be it investments, be it banking, is becoming much more mainstream, right? But apart from all these tech tools that are out there, what would you recommend someone who's completely new to investing in finance? How should they get started? How should they go about it?
So finance to me is more of a behavior and a psychology, right? And this is what I teach in most of my session. I don't tell them
Right.
where to invest. I tell them what to do and what not to do, right? So if you see most youngsters today, or we call them millennials, Gen Z, Gen Y, I don't know, right? So most of them don't believe in long-term investing, right? Most of them live for today compared to our past generation, our parents who used to save for the future, right?
Right.
They were mostly debt free, and the current generation survives on debt. So what we need to do is, one is introduce probably the financial education right at the school stage, where we
Absolutely.
teach people life skill about finance. We teach everything to people. We make them extremely brilliant, but we don't teach them life skills.
Yeah.
Right. So very, very important that we slowly and sooner than later introduce finance at schools. Second is tell them that it's more about behavior and psychology rather than it's a art or a science.
Absolutely.
Right. You have enough experts who will help them with managing the money, but for them it's important to get started.
Right.
So the power of saving, the power of investing, the power of compounding is what we need to tell them. If you can show that and get them through, I think we are done.
Right.
Right? There are enough people who will take care of what to do with the money. Important is to get into that discipline of saving and investing
Right.
and thinking long term.
Absolutely.
Right? Even with that little bit of money, if you are thinking long term, it can create enough wealth
Right.
for you to make it.
No, that I think that discipline point that you talked about is crucial, right? There's this very famous saying, it's not timing the market,
It's
it's
about
time
in the market. Yes.
right? And I think most young people are yet to understand that
Yes.
because they haven't seen market cycles as a whole. But I think if I were to give one key takeaway to our audiences today, that would be just start small. But then just forget about that money once you invest it.
Yes.
And think like you're going to get this money, 10 years later, 20 years later, and then you'll see the magic of investing manifest itself. So this is actually pretty amazing in terms of inculcating that decision making. But if you were to just tell someone, okay, step 1, step 2, step 3, this is what you need to do to start your first investment, what would you say to someone young?
So first thing I'll do is generally how do we define savings? We say income minus expenses is savings. I just turn it around and I say income minus savings is your expense.
Absolutely. Save first.
Save first, right? So that there's another term for that. We call it pay yourself first.
Yeah.
So PYF, right? So when you get 100 rupees as a salary, pay yourself 20 rupees and remaining 80 you manage your expenses, right?
Absolutely.
And to make sure that this happens, what I preach or I teach is automate this whole thing. So that there's no manual intervention where you have, okay, can I use 90 this month? Can I use 100 this month? I'll save next month. No, let's not do that. So start with whatever you are comfortable with. Start with 10 and then see if 10 is enough or you want to make it 20 or you want to make it 5. But
Right.
automate that so
Makes
that
sense.
you don't touch those 20. Right? So that's the easiest piece to do.
Yep.
But yeah, very difficult to convince and get started. And once you start, I think the rest will follow.
Right. No, that makes complete sense. And like one of the most common questions that we get is, how do I get better at saving?
Yes.
So it's so psychological that it's literally splitting your money in a different bank account. And you just keeping it in mind that you're not going to touch that money. That's all you need to do essentially, right? Which is I think some great advice for someone who's just starting off. Now, for these young people, the first thing that they need to do is build up the savings in the bank account. But we obviously know that bank accounts don't give us enough interest, right? So what do you think is the first instrument that young people should consider as their first investment?
So I think most people today are influenced still by the previous generation, right? So our parents' generation, where the only instrument they know or like is FDs,
Yep.
real estate, and gold.
Yep.
Right? And most of our generation has been forced to buy these things, irrespective of where the industry is going. Yeah, so the first, my advice to most of the people I teach or when I take my workshop is that start with index funds.
Right.
Right? Which are absolutely no-brainer. Costs are super low. And if not anything, you will earn what the index generates.
Right.
So you don't need to worry at all about that. Right? So that's the easiest one. Passive investment, you don't need to worry at all. And that's one thing you can get started with. Once you start gaining some confidence and start learning a little more, then you can start thinking of going in diversified funds on equity and mutual fund or whatever.
Right. That also makes complete sense. Starting off with a well-diversified index fund, putting it on autopilot, so to say. But there's been a common, I would say, myth out there in the market, right? Which is stock market is gambling, right? And because of that, people are like, oh, if mutual funds are investing in stock market, is that gambling too, right? So how would you go about debunking this myth for someone young who's watching today?
So if you take our history for last 50 years of a stock exchange, right, there is only one direction this has gone up, right? It has gone from 0 to today at 74,000 and the Nifty is at around 22,000,
Yeah.
right? So there's only one way this has gone. Irrespective of all the ups and downs, all the cycles, all the events that we have seen in the last 20, 25 years. I myself have been here for 25 years now. And we have seen the dot-com bust, we have seen the banking scam, we have seen Harshad Mehta scam, we have seen Ketan Mehta scam. So we have seen all of that, and still we are at 22,000.
Yeah.
Right? So what we need to understand that it's a gambling if you go in and go out every day. If you're watching it
Short
every
term.
second day, if you take decisions based on the movements. Like you said, it's not about timing the market, it's about time in the market. And the history shows that if you are invested for more than 7 years, you will never make a loss.
Right.
If you are invested for more than 10 years, you will always make money. If you are invested for 20 years, you will make more than 10 to 12%.
Absolutely.
Right? So we need to tell people that it's the volatility, which is a gambling. So we are not here for punting, but we are here for investing.
True.
Be there for long, you will not lose money. And that's what mutual funds are. Second is mutual funds are diversified, so they take away the individual stock specific risk.
Yeah.
Right? So you have cushion in other stocks. Not everything will fall together, not everything will rise together. Right?
Absolutely.
So it basically averages out your risk.
Right.
So these are the two things I generally teach people so that they are more convinced to invest in mutual funds, though the mutual funds invest in stocks.
Invest in stocks. No, that's a fantastic point, and I think diversification is key there, right? But I think one thing that most young people need to understand is how do stock prices increase in value, right? Because over time they don't just increase in value because there's higher demand. The fundamentals of the company are getting better.
Yes.
The profits are increasing, the revenues are increasing, so the actual value of the company is going up. So you're making real value and real money. Which is I think a concept that most people haven't been taught yet. And I think if more people understood this, it would not feel as much as a gamble. It would seem like a calculated risk that you're taking. So that's a crucial point that you talked about. Was your journey when you started off similar? Did you start off with index funds, or was it a different approach for you?
Absolutely. So I started with pure index fund and very small amount. And probably in 3 years, you started seeing the corpus build up.
Right.
And also the returns start to show up. Even if it's not phenomenal, it starts to show up. And then in the meanwhile, I was educating myself. I went through certification. So I started looking at diversification. And then I started getting into real estate, gold, direct stocks, and multitude of mutual funds.
Right.
So it has been a long journey. But yes, the starting point was very simple, very small with index funds.
Yep. And I think one very crucial point that you mentioned was when you got started, you started seeing the value of it 3 years down the line, right? I see most retail investors that get started, within the first 1 year, they start panicking if there's a market dip, right? So I think what would your advice be for those people who, the moment they see red on their portfolio, they start panicking and withdrawing their investments?
Yeah, so even this is what I also teach them or tell them in my sessions, that invest in stock market only what you can afford to lose.
Right.
Or in spite of the dips or the reds, you can stay put. Right. Then only you should venture there. Otherwise, stay out of it. Right.
True.
And this will give you returns in the long term. So you don't expect it today, tomorrow, day after.
Yeah.
But look at it at 5 years down the line, 7 years down the line.
Yep. No, and I think one very important thing to what you said is diversification again.
Absolutely.
So if your portfolio dips by 10 to 20%, you've got to realize that it's about 50 stocks or 100 stocks in there, right? So it's not that all those 50 to 100 stocks are going to go bust. Which is the most important thing that people need to know, which is the fear or fear mongering that comes in, right? Which is, oh no, I'm going to lose all my money, but that's very unlikely if you're investing in broadly diversified index funds.
Yeah, and other thing I keep telling people is stay away from these news channels or the media or those influencers, because everybody has a stake in what they're saying.
True.
It's not they're saying it for you.
Absolutely.
Second is we are talking about personal finance. That means it's very personal to me. It's unique to me. So nobody knows my unique situation.
Absolutely.
What you are giving is a generalized advice. It doesn't apply to everybody.
Everyone.
Right?
Totally
so
agree.
first thing that you should do is stay away from all these influencers and news channels who are preaching whole day. If those guys were that brilliant, they would have made enough money not to talk on TV. Yeah. And same for all these influencers. Right? And we have seen over the last couple of years how the influencers have been failing the investors, right? And most of the retail investors. So I pity them, because these are the people who are very vulnerable.
Right.
Ideally, we should be enabling them to do something good, whereas they have been failed by these influencers.
Right.
So I
That's
feel
a massive
that's
important
like
point.
that's a big no-no for this industry.
Right?
Especially for a country like India, where the poverty is massive and we want to bring the people out of poverty.
Yep.
So we shouldn't be trying all this.
Right. Absolutely. And I think there's one similarity that will actually help people understand this really well. Imagine medical field, right? Imagine if you got sick and you just took all your advice from Google.
Exactly.
You know what's going to happen, right? You do check on Google to do a sanity check, but then you do need to go to a doctor when it comes to personalized advice. So I think it's the same way in finance as well. If you want to check high level, just understand what is out there, but take it with a pinch of salt, right? And in your own situation, work with a financial advisor or do your own research, right? You have those two choices and two choices only. But you talked about this very critical point that the finance world is changing at a very rapid rate, right? There are investments. I don't even know if can be called an investment just yet, but instruments like crypto are coming in. So what is your take on this? Because we see a lot of young people putting in all of their hard-earned savings into instruments like crypto. So what are your thoughts on these assets?
So I'll go back to the basics, right? In a country where people don't understand FD and compounding, we are talking about crypto, right? So I myself stay away from crypto. I have zero interest and zero knowledge about crypto.
Right.
And I make a disclaimer in my session that don't ask me anything about crypto. I'm not going to talk about it. Not that I don't want to understand or don't want to go there. Problem is this is, I think for a common man who doesn't understand FD, it's too complex a thing.
Right.
Secondly, it's not a body which is governed by anybody. So there's no governance around that. So chances, the risks are very high. So we saw what happened in the last probably 5, 6, 7 years, right? And including the influencers who are preaching crypto or who sold crypto to their investors lost so much of money, right? And there's no recourse to that.
Absolutely.
Right. So I personally am absolutely no to crypto from my end.
Right.
I don't go there.
Yep, and you know, just to add on to that, from a financial advisor's perspective, we see crypto as a speculative asset.
Absolutely.
Right, because there is no way for us to determine the fair value of a Bitcoin or an Ethereum. So it literally comes down to what a bunch of people together believe what the consensus price will be, and that will always be erratic because human emotions are erratic, right? So I would say if you enjoy casinos or if you want to do gambling, you could try it out, but do it with a pool of money that you're okay to lose. Which is the most important thing that people should understand, and don't dump all your hard-earned savings into such a speculative asset.
I think people need to understand that there is no easy money.
Yeah.
And there is no quick money.
Quick money.
Right. Anything which is quick is not lasting.
Yeah,
right?
absolutely.
So we need to be very, very clear about these things. So idea is that we should be very honest when we tell people what we're talking about.
Right.
Don't show them get rich quick schemes and get rich tomorrow schemes and make crores in a year. No, let's not go there. Let's be honest so that we can do real good to people, so that we can help people come out of poverty or achieve financial independence.
Right, absolutely. I think what ends up happening is these sort of get-rich-quick schemes end up being very clickbaity, right? And a lot of people get enticed by that. But that's where our job sort of comes in, right? Where we need to have these honest, real conversations about what is going out there. So I really appreciate all the insights that you're sharing with us, because I think it's going to really help out our audience quite a bit. Now, I also want to sort of dip a bit more into your investment experience. Because first of all, with a full-blown corporate career, with so much time that goes into building a family, how do you find time to manage your finances along with everything that you need to do with your job?
I think if you're passionate about something, you see value in something which aligns with your value system, I think you will find time for that. Right. So like I said, now I've given up on that teaching at BITS Pilani, so that gives me some more time over the weekends.
Right.
And since it's a passion, so I do these workshops whenever possible. Frequency can keep changing. Yeah, but I see a value in this, and this is, I somehow see it as a way of giving back to the society.
Right.
So this is my way of doing CSR for the people.
Right.
I don't go and donate something, or I don't go and do something else.
Right.
But if I can uplift few people, just a few people out of poverty, or help them achieve their financial goals, I think that's big.
Right.
That's what keeps me going.
Right.
And I have many examples where it has made a difference. So I'll give you one example. So I do these sessions very now and then. And one day while I was walking in my office, one guy kept calling from behind. He came and said, "I want to speak to you." I said, "Yeah, sure." He said, "I want to talk to you about something." I said, "Yeah, you gave a session 3-4 months back. And you know what happened?" I said, "No." He said, "There was a guy who attended that session. And after the session, he went and bought 1 crore plus of life insurance." I said, "Good. That's what I intended to do." He said, "Yeah, but that's not the end of the story. The sad part is he passed away."
Oh, wow. Okay.
And now his family survives because of that advice. So can you imagine the impact that session created on his family?
That is powerful.
That's powerful. And I still remember that conversation with that guy in the corridor.
Right.
And that's what keeps me driving, doing these sessions again and again and again.
Right. Right.
Right. And there are many such examples where you have made a difference and an impact on individual and the family.
Right. No, that's
This is
absolutely
motivating,
amazing.
yeah.
And I think this is something that can be a huge takeaway
Yeah.
for most people, because when it comes to products like insurance, people feel that, oh, ye mujhe to nahi hoga. Right? And when it comes to health insurance, when it comes to life insurance, it's such important products, managing your risk, protecting your family.
Absolutely.
So again, what would be your insurance advice to young people, which you would have covered to this gentleman in your session last time as well?
So I generally, insurance, as we all know, right? It has been most grossly missold product in this country. It has been sold as an investment product.
Yeah.
Right. So first thing I tell people is don't mix insurance and investment. These are two separate things. Keep them
Absolutely.
apart. So no ULIPs, no endowment policy, no money back policies. Just stay away.
Right.
All these policies have been built like a trap.
Mm.
You keep paying, you don't get returns until
Right.
you're 20 years down the line or 15 years down the line. And the returns are what? Minuscule, 5%, 6%.
Right.
Don't even beat inflation, right?
Right.
So that's the first thing. Don't mix these two. Second is start early. It's cheap.
Yeah.
Stay with pure life insurance, term plan.
Term plans.
You get it for 3K, keep increasing. Take it early so that you are covered till 60, 70, whatever.
Right.
At a very, very low price.
Absolutely.
Right? And same for health insurance. Why you should do this? Because one event in your life can take away all your life savings.
Right.
It's one of the most expensive sectors, right? And I think most people have to go through that event. Unfortunately, they should not. But people who have seen this. COVID is the best example, where best of people went through this.
Yep.
Right? So we give them some examples to convince them that yes, you should take that as much as possible.
Right.
Most people, for example, in my office, we have very good health policy. Most people don't take the top up.
Exactly.
They take the basic one of 4 lakhs or 5 lakhs. Right? You can take up to 25 lakhs. Most people don't
Right.
take it because they think, like you said, nothing will happen to me.
Yeah.
Right? But when they see somebody else going through that,
Hmm.
that convinces them to take it, top it up to 10 lakhs, 15 lakhs, 20 lakhs. And that comes
Absolutely.
so cheap. Right? So it takes some bit of convincing because as a human being, we always believe that nothing will happen to us.
Yep.
Right? So these are the two things which I say you must have.
Must have.
One, if your office provides good, if they provide, then also you should go and have one more from outside.
Absolutely.
Because you may have the job tomorrow, you may not have the job tomorrow.
Exactly.
Right?
Exactly.
So this is what I suggest to most people, and there are some people who have done it. Others probably will follow sometime.
Yep. And what the last point that you made is again very crucial. Again, something that we say to all our clients: even though you might have a very good company insurance,
absolutely.
you won't be with this company forever. And that is when you need that health insurance the most, right? Which is when it totally goes away. And if you do try to sign up for it very late in life, pre-existing conditions might become an issue.
Yes.
So it's almost like something that you're investing in early and you have to continue to invest in. Like it's a small portion of your money. We say less than 3 to 5% of your income should go into insurance. So it really won't change your life, but it can change your life if something were to go wrong.
Yeah. Another thing is, this is how human mind works, right? We don't question when taking a car insurance.
Yeah, exactly.
Right? But we think so much when taking a life insurance or a health insurance,
insurance.
right?
Yeah.
So I give this example that did you talk to your dealer while taking the car insurance? Should I take it or not? Is that a choice?
Yeah.
It's not a choice. Then why on human life it's a choice?
Exactly. Your most important
Yes.
asset is what you're not insuring, which
Exactly.
is yourself.
Yeah.
No, that's very, very good advice, and I think everyone should definitely implement it. And again, one thing that's related to the question of risk management, something that's related to not just building your portfolio but managing your portfolio over years and years. Now, tell me, with your sort of busy work schedule, with your all the coaching and training that you do, all the other pro bono work that you do on the side, how have you gone about managing your own portfolio? We talked about the market cycles that have come, right? And so many things that have happened. What are it that you keep doing, be it passively, actively, to continue to make sure your portfolio is heading in the right direction over the years?
So I don't do much actually. So I'm more like a passive investor.
Right.
And generally I have only one way. So I keep buying. That's
Right.
all. I don't sell. Right. And I buy the right stock. So I follow Ramdev Agarwal, buy right, sit tight. I'm a huge follower of Saurabh Mukherjee.
Yeah.
So
Coffee
his
can
portfolio,
invest.
Coffee Can Investing, is a huge motivation for me. Though I know his stocks have not done well for the last few years probably now, but I still believe in his stocks.
Yeah.
So I stick to premium blue chips predominantly, and
Right.
on every dip I just keep buying. So I'm kind of risk free, and my horizon is 10, 15, 20 years and not 5 years.
Makes sense.
right? So on every dip now, we have seen what's happening in the market for last year and a half. It's
Yep.
stable, but it goes down 5%, comes back.
Yep.
Right. So that's how I manage my risk. So I'm not a very risk averse person, but the way I build my portfolio, either mutual funds or this, is more like very, very stable.
Right.
So if it dips by 10%, 15%, I'm not worried at all.
Yep, that makes complete sense as well. And for our audience especially, because we talked about direct stock investments, we talked about coffee can investing. So there are a lot of investment strategies like value investing that comes into play. But I think buying a Nifty 50 index would sort of help you solve both of these
Yes.
problems, right? Because
Yes.
your premium blue chips are all in there. And you're betting on the growth of the Indian economy if you do invest like
Exactly.
in a Nifty 50
Exactly.
index. So that's a great point. And again, guys, as you saw, Manoj doesn't really look at his portfolio actively, right? He's just letting it grow. And I'm sure it's very much in green right now.
It is.
And growing at a very rapid rate. So that's all that people need to do. Not try to time the market, but stay invested. For
Another
long.
thing I keep telling people is don't look at returns. Right? Returns in isolation will not help you.
True.
It's also the quantum of money that you put in.
Absolutely.
So if you put 10,000, it doubles 20K. What will you do with 20K?
True that.
Right?
True that.
If you put 10 lakhs and you get 20% return or 10% return, half of it, that's more than 20.
Absolutely.
Right? So it's not the absolute return which should matter. It's also the quantum of money that you invest.
Right.
Right? So both should be considered. Secondly, when you talk about returns, in the long run, I think it evens out. Right? There's not much to differentiate between different kind of returns or assets.
Yep.
Right? If you stick around for long, I think everybody will make decent return of 12 to 15%. Right? Unless you are looking at 20 plus, then you need to do something special.
Yep.
Or if you do something really bad, then you are looking at on the downside. But if you don't play too many tricks or don't try too many things,
Yep.
I think you will end up with 12 to 15% over a long period of time.
Absolutely, absolutely, and totally agree with that. And you could simply have a portfolio of 4 to 5 mutual funds that could get you to that return, because it's not just large cap or index funds. You do have other variables as well. You do
Flexi
have
cap,
thematic
mid-cap
funds. You have small cap. You have mid cap, which at the moment is definitely on the high risk side. But as long as you're doing SIPs and you continue to do them consistently,
Absolutely.
it doesn't matter what the time of the market is like, right? So, what advice would you give to someone who would want to do a lump sum investment? Because I think that's where whether the market is overbought, whether it's underbought, that becomes a more crucial factor, right? And a lot of people get bonuses and they don't know what to do with it. So what would you advise those people?
So I say that park the money in any debt fund, so which is safe,
Yep.
and then do a STP, which
Right.
is more like transfer it systematically into some mutual fund or the other.
Absolutely.
So you are basically putting the fund which gives you 6 to 7% return, debt fund,
Yeah.
and then start your SIPs through that fund.
Absolutely.
So
That's
again-
a very great approach, and we call it smart SIP.
Yeah, smart SIP.
Because you're doing the SIP not from your bank account,
Yes,
but
from
from
your
another
other
fund
fund.
that's giving you returns better than FD for the most part. Right? So that's a very great approach, and we subscribe to that completely. And in fact, if you would like to find arbitrage opportunities, if you would like to find opportunities where you could make a higher return, that's where you add some
Yes.
thematic or global funds into your portfolio. But amazing to hear your simplified yet effective investment strategy, because I think this is something that can be plug and play, but you have to definitely see what works for you in your situation as well. So now, Manoj, I think totally understand your investment mantra, but I want to do a fun little game with you. So I call it a little bit of a rapid fire. Okay. So I'm sure you've seen Coffee with Karan, right? I'm sorry to reference that show here, but the similar format to that, right? I'll ask you a few quick questions and just give me quick responses. Okay. So the first question is Bitcoin or gold?
Gold,
Okay. Mutual funds or stocks?
stocks,
Cricket or football?
football,
Buying or renting?
buying,
And coffee or tea?
tea,
What would be your one favorite investment vehicle?
mutual funds,
Okay. And what is your favorite finance book that you've ever read?
Psychology of Money
Psychology of Money.
by Morgan
Nice.
Housel,
Yes, very nice book. One word to describe your investing style.
patience,
Patience. That's a good one. One piece of advice, one single piece of advice for a 22-year-old fresh graduate.
think long term,
Think long term. Last app that you checked on your phone today.
LinkedIn.
And last fintech app that you checked on your phone today.
I don't have a fintech app on my.
Maybe Cashvisory then. Next time. If you could only invest in two stocks for the rest of your life, what would those stocks be?
Reliance and HDFC.
Nice. And if you won a lottery of 10 crores today, how would you manage that pool of money? Where would you deploy it?
I'll deploy that, like I said, into debt fund and then into SIPs,
Right.
and maybe use part of it to live some experiences for the time being.
Right.
So
Awesome.
travel around the world, do some experience.
So maintain that sort of balance
Yes.
between giving yourself some bit of playtime as well,
Yes.
but at the same time
Yes.
deploying majority of it to your long-term future. I think that was absolutely amazing, Manoj. I think your insights, I'm sure, will help every single person out that's
I hope
attended
so.
today. And we'd be looking forward to doing a lot of these sessions with you, and even these corporate sessions with you, because I think we're on a common mission, which is to help people out, educate them on the basics of finance, because we really want every single person to be empowered to be able to make the right financially savvy decisions for themselves
Absolutely.
and for their family.
Absolutely.
So thank you so much again
Thank
for
you so
joining
much,
us here
Utkarsh,
today.
for having
It was
me
an
here.
absolute pleasure. And thank you again, guys, for joining us. It was an absolute pleasure having you, and hope you learned a couple of new things here from us today. Do keep coming back to our next session, next episode, and I'm sure you'll continue to learn new things along the way. Thanks again, Manoj.
Thank you so much.